Welcome back to the channel. Dual Economics here with another episode. What's up, man?
Yo, ski.
Falcons won. 2-0.
They still up.
2-0. We going 2-0.
I ain't gonna hate. I'm gonna let you have that.
We going to the Super Bowl. Bijan Robinson is getting Rookie of the Year. He is electrifying. Yes, he is.
Brady didn't threw in his hat, so I'm willing to just sit back and watch.
We 2-0.
I'm willing to sit back and watch.
Yeah, man. So,
I do want to get into this, but normally I don't say nothing when you mention sports. But I do want to say this, bro. I'm not a Falcons fan, but I do want to check out their running back, like you mentioned. Bro. Also, like I said, I ain't got no team for this year, but I want to check them out just because, you know what I'm saying, we in Georgia, number one. I also want to check out, I'm going to be keeping a close eye on the Dolphins. And I'm going to be keeping a close eye on Kansas City. If the Dolphins stay healthy, I think they're going to be a problem. And I think Kansas City always going to be a problem. So, you know what I'm saying, I'm going to be looking at them a good little bit.
Hey, man.
I ain't got no team, though. Not right now. Not since the break.
Dolphins is my pick to go to the Super Bowl this year.
I want them to
Dolphins is my pick to go to the Super Bowl this year.
If they stay healthy, they're my pick too. They were my pick last year, just so happened at the beginning of the season. You know what I'm saying? It's crazy.
They got a sick team, man. But they my pick. I don't know who they're gonna play against, but I got Dolphins definitely. I mean, the Chiefs ain't gonna go to the playoffs.
Hey, but we got to get into this. We're going to be talking about crypto. We're going to be talking about Bitcoin, Binance, silver,
crypto
oil.
hacks.
We got Fed chair meeting coming up this Wednesday. A whole lot, which is technically probably going to be tomorrow based off when we release this. We got a whole lot coming up. I know I just jumped the gun on you on the intro, Marcus.
Hey, you straight, man. All right, man.
First and foremost, you already know we got the Fed meeting coming up this Wednesday. I don't know if it's Tuesday and Wednesday, but I know they're gonna say whether or not they're gonna take up the interest rates on Wednesday. As far as the news, all the news that happened then, but I do quickly want to know what's your opinion on the interest rates, bro.
So the pregame is tomorrow, then the actual thing happened on Wednesday. So
yeah. What you think?
Honestly, man, I don't. From the day that we had today, I don't think they're going to do it, man. I think it's going to be a pause.
You think
we're going to have a pause because, bro, like the market's erupted today, man. Like everything is up. Normally, when they're about to do the rate hike and they actually do it, it's a big dip. There's a big dip, and normally the market treads down. But this is weird, bro. Like we going up, and this ain't like one of those little pump. Like we look like we steadily climbing, man. So I think it's gonna be a pause.
I'm right there with you, bro. I know in the past I said I believe, based off kind of what Jerome was saying, I believe that a hike would come in either September or November if inflation news came in hot enough, CPI data, job reports, and all that stuff. I know they did come in a little bit hot over the past few weeks, but it hasn't been tough enough to just cause any issues. And outside of my personal bias, I believe in going with the statistics. So for that reason, I'm bringing you, myself, and the viewers to the CME Fed Watch tool page, which will always have the amount of days and time into the next Fed meeting, and it'll also show you the probability of the Fed raising, holding, or reducing interest rate based off current statistics. So right now, bro, the charts, and this is like I said on the CME Fed Watch page. Right now, bro, the data shows that the probability of them holding rates at 525 basis points, which is basically 5.25% to 5.5%, is 98% chance. So basically, bro, based off of the data, you are correct We will know on once they have the meeting. But I think everybody for the most part are expecting to hold at this next meeting. One of the interesting things I found at this on this site, bro, is that the statistics aren't only just showing that they're expected to hold at this meeting. I see I've noticed in the past that this stuff has been pretty much dead on for the most part over the past year. But I noticed that the probability of the rate staying where it is, which is, as you see, 5.25% to 5.5%, is 98% this month. If we go to the November meeting, it's still trying to scroll down. It's still 71% chance. The highest probability is still leaning towards it holding in both the September and the November meeting. If we go forward, I wish I could navigate through.
That's interesting. So they think that, man, so according to this, we shouldn't be seeing any more rate hikes for the rest of this year.
Look at the November meeting, bro. I mean, this is December. January, still highest probability it is staying the same.
Man,
it don't really change until May, and the majority of the probability is still at it staying the same.
it's still
in May, and it starts to skew towards it going actually lower, and it actually skews it definitely towards it going lower more so in June of next year. So based off of the statistical data, it doesn't seem like it's really going to be a rate hike at all. So, bro, maybe we won't get a rate hike. Maybe
for the rest of the year.
Maybe they're gonna hold right here, bro.
For the rest of it.
And that led me to think, bro, even if they do a rate hike, I think we all know the answer to this, and this is how predictable it is, because Jerome Powell said he wanted to be predictable. If they was to do a rate hike, bro, what do you think the rate hike would be?
Shoot, another 0.25%.
0.25%, bro, because that's what they did last time. They went up in 0.25% increments, and they went higher to 0.5% increments, and they dropped it down the same way that they went up. So everybody knows that if they do it, it's going to end up being a 0.25% hike or reduction, whenever that happens for the most part, right?
Yeah.
So 0.25% is nothing compared to what they've done in the past. I think they went up by 300-400 basis points altogether.
Mm-hmm.
So
yeah.
My point in saying all of this, bro, is let me go back here. I don't know if you remember, but when we first kicked this whole thing off about the Fed reducing inflation, Jerome Powell said often that this was going to be a dual mandate. Do you remember him saying that often?
A dual mandate?
It's going to be a dual mandate. I'm going to play a clip. If you don't remember, that's fine. But the dual mandate that he always mentioned was not just the Fed raising interest rates as a tool to fight inflation. It was about raising interest rates as well as the Fed selling assets. People don't realize this. This is the Fed's job, bro. And I don't want to get too far into it because I hate going into too far into the details. The Fed's job is to act as an additional person or group of people to support the market. For instance, if we have something bad happen in the economy, the market will sell off, right?
Yeah.
So the Fed's job is to lessen the blow. If it's a big sell-off, it's their job to go in and start purchasing to keep the market afloat. And once everything started to correct, they would sell whatever they purchased to eventually normalize again. So basically, once the pandemic hit, they gave out stimulus and they bought a bunch of stocks. People assumed that the stock market was going up because other people were buying stocks and corporations, which was true because they knew that the government was buying. But for the most part, it was the government that was buying a lot of stocks and stuff, causing the market to go up in order to save the economy, to lessen the blow that was happening with the pandemic. So now that the Fed's balance sheet has went up, outside of them increasing the interest rates, their next job is to reduce their balance sheet. Their balance sheet, and I'm gonna want to play this video. The Fed's balance sheet is going to be Treasury bills. It's going to be stuff like that.
A whole lot. It's like an ETF they choosing.
It's going to be Treasury bills where they didn't invested in the United States government, and it's going to be a whole bunch of mortgage-backed treasuries. If they sell Treasury bills, that means the price of Treasury bills would go down, which means that the interest rates on Treasury bills would go up. You're starting to see that happen now. If they were to sell mortgage-backed securities, that means that the prices of those mortgage-backed securities would end up going down, which would mean that the banks or either who's ever coming up with those mortgages are going to have to raise their rates. So that's going to cause mortgage rates to go up. But like I said, my point before I show you this video is Jerome Powell, when this whole thing first started, talked about how this was going to be a dual mandate of both raising interest, which I think we're pretty much seeing the end of them raising the interest rates based off of the statistics that we just looked at. But you can't forget about the fact that they plan on reducing the balance sheet. And after I show you this video, I want to show you the balance sheet to show you why this is so important, bro.
For example, the federal funds rate is the primary means of adjusting the stance of policy. It will determine the timing and pace of reducing the size of the balance sheet to foster the dual mandate that will begin to reduce the size after we begin the process of raising rates.
He said, after we begin the process of raising rates, which we're about almost at the end of that process, he said that we're going to begin the dual mandate. I don't know if you remember, but back in 2022, he talked about how the Feds was going to start reducing the balance sheet at a max of $95 billion per month. 12 months in a year. If you do 95 billion for 12 months at a max, let's say you don't hit the exact max, but if you get close to it, you're looking at about $1 trillion in a year. Keep that in mind. That means that we should expect over the past year for the Fed to have reduced their balance sheet by about $1 trillion based off of what Jerome Powell said a year ago. This right here is from 1 year ago, literally.
On like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level to try to get at your question. Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global financial crisis. And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified the end state as in amounts needed to implement monetary policy efficiently, effectively in the ample reserve regime. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that
All right. And I know I'm doing a lot to make a point.
And this was a year ago.
This is a year ago.
Hey, bro, you want those crazy, man?
Hold on. Let me make this point and stick with me because I'm saying a lot to get to a point that I'm trying to make, bro.
Okay, let's see.
I definitely want to hear what you got to say, but I want to make this point first. Now, mind you, he just said that they have to. They bought assets, which was basically treasury bills and stocks. They bought assets in order to soften the blow of the pandemic to help the recovery. He just said that. And he also just said that as a result, their balance sheet is over. I can't remember the word that he said, but he basically said it was over by a lot. You just heard him, right? Now I want to show you this. Keep in mind, this was a year ago. A year ago, Jerome Powell also said that they would reduce the balance sheet by up to $95 billion per month as a result of them trying to reduce this inflation. Let's go to the balance sheet. You can go directly to the Federal Reserve Board, which is the Federal Reserve website. Check this out, bro. So this is information I'm getting directly from the Federal Reserve balance sheet, according to them. Let's look at what we have. Let me slide this over so I can see it. Bang. Come on, man. Don't do that.
Hey, so they got their whole balance sheet.
Yes, sir. They got a chart of the balance sheet, dog. Come on, computer. I just want to scroll down. All right, bang. This is what I want to go to. This is 2019. Everything really didn't kick off till about right here in March of 2020. All right, bet. So bang, right here. We're sitting at slightly over. This says million, but it's times 1,000. So this is trillion. But times 100,000, so it's trillion. I'm tripping. But you see right here where it's basically at 4 trillion, right, bro?
Yeah.
Over the pandemic, it basically went from above 4 to above 8. I'm just going. It's slightly over the amount that I'm about to say, but let's just say it went up $4 trillion. We can kind of agree that it went up slightly, somewhere between $4 and $5 trillion, right?
Mm-hmm.
So if the government spent $4 trillion in order to soften the blow of the pandemic, if they're going to clear their balance sheet, according to Jerome Powell, and get it back normal, we would expect it to go back down at least what we would expect it to go down about 4 trillion. But let's say
somewhere around there.
Let's say just due to just stuff going on over time, it's slightly higher. So let's say we expect it to go down 3 trillion total, right? This is my thing, bro. If we expect it to go down 3 trillion total, first of all, of the 3 trillion, we've only done 1 trillion. So that means it's been a year, and we've only gone 1/3 of the way as far as the time it would take to reduce the balance sheet. Mind you, the last thing that I showed you in that video with Jerome Powell was him saying that it would take a long time, right?
Mm-hmm.
Based off of the stuff that we're seeing right now, and the amount that we would expect them to reduce another $2 to $3 trillion, it would take another 2 to 3 years in order to do that. Like I said previously, when they're selling assets, they're selling treasury bills and basically stocks. So if they're selling $3 trillion worth of this stuff over the next 2 to 3 years, that means that we could expect there to be a slump in stock prices or a slump in treasury prices over that time period.
Mm-hmm.
Which is probably why we're seeing the 10-year yield on treasuries down so low, actually lower than the 2-year or the 3-month. You get what I'm saying, bro?
Yeah, because they still in that process. Well, we still got 2-3 more years of that selling off process to go.
And my point in making all this, everybody right now is focused on the Fed taking up the inflation rate. Taking up the Federal Reserve interest rate. Mm-hmm. And at this point, with the Federal Reserve interest rate only going up or down by such small amount of points over such a wide period of time, it's now more important for people to be focused more so on the Fed balance sheet and the fact that the Fed is selling assets instead of the amount that the Fed is going to be reducing or raising the interest rates, being that statistics show that the Fed is probably not going to touch the interest rate for another year.
Yeah. So you think the balance sheet is what we should be looking at. So so asset prices. So as this line begins to slump down, asset prices are going to start going down because of this, right? So they only bought this to kind of help prop up the market a little bit during them bad times. And then now it's like, hey, we got to let go of this. So we should be. I see.
Check this out, dog. $3 to $4 trillion. $3 to $4 trillion worth of assets got to be sold, right?
And you say we've only sold off 1 trillion.
Check this out. We only sold off 1 trillion over the past year.
Mm-hmm.
And that's based off of the Fed's balance sheet. We can look on their site and see this. This is based off of their site. Almost 9 trillion, down to about 8 trillion. This is based off of their site. This is directly from the Federal Reserve.
Jeez.
Now this is
but look at that. I mean, that look like that's coming down, bro. That chart, I wish you could just chart that whole thing out, man. That thing look like it's finna cut.
This is my thing, though, bro. We're talking about $3-4 trillion. The majority of the stocks that the government own, I mean, there's no way for me to prove this exactly. At least I'm not sure. If there is somebody, let me know down in the comments. But I'm sure the majority of the stocks that the government's buying would be the stocks that are found in the S&P 500.
Yeah.
Bigger companies. So we're talking about 10% of the stock market, I mean, of the S&P itself could get wiped out as far as market cap value. If 10% straight up coming out from the government, what's stopping another 10% from coming from the private sector? What's stopping another 10% from coming from the business sector? Especially if they know for a fact that the government is going to be pulling their money out. If I told you, hey, bro, I know for a fact 10% is going to be coming out, would you leave yours there or take it out?
I take it out. If you know for a fact. Yeah, because
what if I told you I know for a fact that you more than likely gonna lose, statistically speaking, you're gonna lose at least 10% right here. But at the same time, you have 3 months treasury notes, 3 months treasury treasury is basically giving you 5%. So you're gonna grab 5% or you're gonna lose 10%.
Grab 5%.
So what happens when you take your money out of the banks? And the banks can't make money, but at the same time, mortgage rates are going up, so they can't make money off mortgage either. So do you end up with what happens? What happens to banks?
They crash over a recession. Recession.
I'm not saying, bro. All I'm saying is the Federal Reserve they are doing this slowly to try to avoid that from happening, and they're doing it in a way that people can like basically speculate and almost predict what they're going to be doing.
So Jerome Powell's version of a soft landing, what he always calls it, is not based on these interest rates, but it's based on how careful we are with letting go of the treasuries and all that.
Jerome's version of a soft landing is a predictable landing.
Especially when they telling us.
I don't want to spend too much time on that video, bro.
That's crazy.
He's saying, I want you guys to basically be able to predict at what rate we're going to do it. Because if investors can predict, or at least think they can predict it, that means that they won't be shocked. So you don't have to worry about causing a big of an issue, too much money leaving or entering at one time if you're already telling people exactly what you're going to do, when you're going to do it, which is exactly what Jerome Powell and the Federal Reserve has been doing almost every 2 months. I think 13 weeks to be exact. They've been doing that every 13 weeks for the past 2 years, bro. And that people been paying attention to really longer than that. But yeah.
And that's how people know when to make the moves that they be making and make them profitable. Jeez.
Like I said, bro, I don't want to spend too much time because I know you got stories too. I want to jump into this also.
No, that's straight though, because that can give you an indicator on basically on how to move for the next 4 to 8 years, maybe. You know what I'm saying?
That's all investors been doing is moving off with Jerome.
So that means, with that being said, that means that what? 2 year, one, maybe. You think we got 2 more years of this? Maybe.
I would say 2 more years after. I would say once, as long as nothing crazy happens, some black swan event. As long as the Feds can normalize their balance sheet again, quote unquote. If they can normalize their balance sheet at that point, they would start issuing money or purchasing assets the way that they normally would. I guess I'm assuming at a rate of 2% or whatever they need to do each year. But Jerome Powell just said himself that the current balance sheet was outrageous for its time. So I'm expecting him to, just like he said, and just like everything has been matching up so far, like to the T. I'm expecting I'm expecting this amount, bro, to at least come back down to this $4 to $4.5 billion range, bro.
somewhere around there, and then once they start to buy back assets, you'll start to see that number slowly go back up again And that's when people slowly start to get back in profits and whatnot. So this is this a bad time to be buying them? According to the total assets of the Federal Reserve, just looking at this chart right here, this chart is saying you probably don't want to be buying, or you probably don't want to be buying right now.
That's exactly what this chart is saying, bro. According to all I would say, I wouldn't say, mind you, when I started this off, I said that the Federal Reserve acts like a person or a group of people purchasing assets to soften the blow. At a time like this, they are acting as like a group of people who are selling assets. I'm not saying right now is a good or bad time necessarily to buy. All I'm saying is there is a system that's acting as a group of people selling. And that group of people or system that's acting as that group of people is definitely going to be selling over the next 1 to 2 years, according to what they're saying.
Yeah.
So all I'm saying is going to be a lot of downward pressure coming specifically from them, according to what they're saying.
What can change this from happening?
Oh no, bro, nothing. You undo the pandemic. You can't. They already spent. They gave out the stimulus. You see. Let me go to the chart.
And that's another thing. That's another thing too, man. This whole inflation and rate hikes and all this other stuff. Didn't the foundation of all of this shit came from COVID-19 and PPE, right?
You see this? You see this spike right here?
That's COVID and PPE loans, right?
Oh, that's stimulus. You know what I'm saying? They gave out.
Stimulus
and
PPE, right?
Not just PP. No, it's not just that, because people only see the money that they receive. More money was given to companies, not directly to the companies. I'm not talking about PPP. More money was given in the form of stock purchases.
Oh.
And think about it, bro. In order to stop the stock market from crashing as people were selling when the pandemic started, the government, if you remember, the market crashed. It was a dip in everything, whether it was metals, crypto. For a day or two, it was a dip in everything. What undid that dip was the government came in and started buying stuff, bro.
And they still holding on to the majority of the stuff that they held back then, and it's they ain't really unloaded that stuff yet.
Exactly. They put $4 or $5 million worth of cash out. If I'm not mistaken, about $4 or $5 trillion worth of cash out. If I'm not mistaken, 2 or 3, probably $2 trillion went directly to people, but you're still talking about another $3 trillion that's still out there, bro. Plus,
jeez, yeah, man. Wow. And according to this chart, where are we trying to get? So I see this. That's a huge candle.
It's not necessarily where we're trying to get, is what's normal. You know what I'm saying? If you go back,
so before that line, before the pandemic, we can go at the bottom of that line right there. Yeah. So yeah, somewhere right there is like, that's before the pandemic. So we was already taking a little dip before. So, geez, man. So I guess we definitely gonna have to go below that. What's that? 6 million? Is that 6 million right there?
It's actually a trillion. It's looking at lines on here. I'm trying to see if I can find something that
No, bro. Hey man, this is some
you got to multiply times a million. So, but yeah, it's $1 trillion.
Yeah, no, man, this is an important chart to look at, man, because this can be an indicator on when you should be buying stuff, like to catch them God candles, because that looks like it's a God candle. Look at that, bro. If you could turn this balance sheet into like an actual chart, and to see this candle right here, and to think about them people that look, they bought this. Look at that dip. Look at that dip right there. You see that dip before it starts to go parabolic right there. Like, even when you seen that dip right there, it's like, okay, we're going up, but you ain't expect for it to go up that high.
Yeah, like I said, bro, it's kind of different because this is a balance sheet, not necessarily a chart for something. But just like Jerome Powell said, their spending went outrageous, so they got to cut back. But they had to do that, at least they felt, in order to save the economy from going down. So it's gonna take, just like he said, some time to undo that, especially if you're doing it at a rate of $95 billion per month. It's gonna take another 2 or 3 years, bro.
Yeah, man. I'm gonna have to add this. I'm gonna have to add that to my bookmark. I'm gonna have to bookmark this page.
Definitely. CME. Well, the other site that I went to was the CME Fed Watch tool. This is right here, directly from the Federal Reserve. If you just Google Federal Reserve balance sheet, it'll take you directly to this. But I also want to show this, bro.
All right.
I want to talk about metals real quickly, but before I start talking, I wanted to ask you, bro. Have you been seeing anything on YouTube and related to like advertisement for a metals company recently?
Advertisement for a metals company?
Yeah, bro. I went on YouTube today and I saw.
What's the name of it?
I really don't want to say the name, especially being that they're not advertising or paying us to advertise on our channel, bro. But I saw about 3 or 4.
Oh yeah, I be hearing them when I be listening to my sports radio talk show and listen to
Hold on. Let me say this though, bro. I've been hearing about of the shows that I watch like daily. I heard about 3 or 4 shows on YouTube advertised for a specific company in like the last 2 days. And I would say the first 2 initials for the company is WR. Like I said, I don't want to say it because they haven't invested in our platform. But have you heard this recently?
WR?
Yeah, if you haven't, that's fine.
I've heard a lot of.
My question, bro, is today or yesterday, have you heard any specific metal advertisement on your YouTube channel that you watch?
Not on YouTube.
Okay. All right. The reason I was asking, like I said, I saw a bunch of stuff related to the specific company on YouTube recently. And I know that on September 14th, I saw something really happen intraday with silver. I know it's showing the low on this JM Bullion chart for silver of 2263, but it went below this. I can't remember the exact number. I don't know if it was 2250 something or 2230 something. But silver basically dropped like 75 cent in not 75%, but 75 cent in one day. And it was like in a matter of hours, and almost nobody actually caught it. And I found it strange that silver did that jump, and then it pumped actually to where above it was here. It dumped and pumped to back where it was without almost anybody noticing. And then 2 or 3 days later, all of a sudden I found it strange that the company would just be advertising everywhere. You get what I'm saying?
Yeah. You told me about that silver. You told me about that silver. I was like, okay, but I ain't. So it was like a little flash crash.
I'm not. Yeah, bro. I'm not saying that this company is behind it, but one of the dudes I was listening to on YouTube, he said that specifically the company, you know what I'm saying, paid him to advertise, their company, and they also paid him specifically to advertise for the company on the day that he did it, which is the day that I saw the other channels advertising for it too. So I'm wondering, was like anybody like planning a pullback and then like a jump in the market?
Or
and
planning
like,
a dump.
You know what I'm saying?
Yeah.
It kind of felt like that whole FTX situation.
But look at it. But look. I mean, it recovered over where it was.
But what I'm saying is, though, you remember when before FTX blew up. Not saying that silver was like FTX, but just the market pattern of the company. Not saying that the company is doing the same thing. It just hit my radar. But you remember when FTX, before it blew up, a bunch of YouTube channels out of nowhere, like the same week, all start advertising for FTX. Remember that?
Mm-hmm.
It had that same feeling to it, bro. And I just found it to be weird to happen like a few days after silver just had a weird move.
So what you think? So you think?
I mean, it could be nothing. Like I said, I just thought it was weird, bro, and I just wanted to see if any of your videos that you had been watching, if that had happened. Because I watch Economic Ninja. I think it happened on his channel. Salivate Metal. I watched for Metals. I think it happened on that person's channel. And I don't want to just be naming out random channels that ain't correct, but I think it happened on like 2 or 3 more channels that I watched dealing with metals. I just thought it was kind of weird, bro.
Was you able to capitalize off of that?
Capitalize off what?
Off of this dip right here?
I mean, no, it's not possible to have capitalized off that dip, not in this amount of time. The dip was like, okay, let's say the dip was basically like $1, but the premium on silver right now is like $3-4.
Yeah, that was saying. Yeah, that was saying, bro. It's
not really possible to have capitalized off that. I mean, I guess if you're moving like,
what if you're doing like the paper shares?
Yeah, if you're doing the paper market ETFs and stuff like that, you could have made a move, but you know what I'm saying. As far as the physical and stuff, nah.
I don't know, man. That's
You thinking about getting into the paper metal market?
Nah, man. I'd rather hold just regular silver, bro.
Me too, bro.
I'd rather just hold physical silver.
Me too, bro. But I really been thinking about getting into as far as trading silver, get into SLVR. It's like one of the ETFs. I don't know who behind it. I know BlackRock behind PSLVR, something like that.
You said SLVR?
Yeah, I've been thinking about it.
Let me see.
It's an ETF. But I've been thinking about getting in with them. I think it should be at the spot price.
That's Silver SPAC Inc.
How much is it right now? Like the same price?
Silver.
It should be the spot price.
Is it? Hold on. Is it Tiger? Is it Silver Tiger Metals or is it Silver SPAC?
No, bro.
SLVR.
SLVR. Yeah.
Silver SPAC. So 1046. I see it. 10. Let's see. Let's go to the max. Let's see how the max.
Hold on. I think I just told you the wrong one.
I'm saying because there's a few of them.
Here we go, right here. Come on. Here we go.
I share. Okay.
Yeah, SLV.
Okay. SLV.
And PSL.
Hey, go to the max. Go to the max. Go to the max. Go to the max. Let's see where it is.
It's gonna follow the price of silver for the most part, bro.
Okay.
But moving along, I wanted to show y'all this, and I'm almost done, bro. Come on. I want to go back to JM Bullion. Go back to JM Bullion silver price. I just felt like this was cool. I wanted to show it to you and the viewers before I went on to my next topic. If the computer would go ahead and do as I would like for it to do. Come on. All right, here's the chart for silver. Just gonna go to 1 month, but I found it cool, bro. JM Bullion. I'm sure a lot of other sites do it. This is the silver price in dollars, but you can compare it to other stuff like the S&P 500. You can compare it to the FTSE, the Dow Jones, crude oil prices, and the dollar itself, bro. I just thought it was cool to notice how
JM Bullion. Oh man, look at that.
I just thought it was cool to notice how crude oil has been doing a lot better than silver. It's up 15-14% over the past month.
Do the S&P. Let's see what the S&P look like. Golly.
S&P, I guess, is right at about 2%. Like I said,
crude oil is just destroying.
And you know why? And we've been talking about this. Why? Why? I hope the viewers know. If you know, write it down in the comments. United States trying to block out China, Saudi Arabia. Well, for the most part, China and Russia specifically.
These sanctions is the reason why these oil prices is up, which is the reason why these gas prices is up, man.
I'm gonna come back to the metals, but I just want to briefly touch on this. Mind you, U.S. sanctions against Russia basically say no oil from the United States to Russia, and if you are an ally of the United States, you are to sell your oil, you are to purchase oil from Russia at $60. Right now, according to this chart, it looks like the U.S. crude oil price, which is the Russian crude oil price, is at about $80 per barrel. And if we go up, I thought it was going to be up here. Yeah, it's currently trading at $80 a barrel, which is about, 30%, about 33% higher than the actual price that the United States and their allies said that they would sell oil to Russia. I just thought that was crazy, bro. Going back to this chart, it's on one screen for y'all, but I keep having to switch. If you notice, for 2023, we are near the peak of oil prices for this year. So with the sanctions that's currently going on, per barrel of oil, Russia is currently making the most profit that they have for the year, which is pretty interesting.
I'm telling you, bro, them sanctions, man, could possibly turn out to be the worst decision ever made in history, bro. Like that in our lifetime, probably them sanctions could really turn out to be like the turning point of how shit just normally is, to be honest.
I think people have forgot about back in 07, 08, there was a period of time where gas prices got super high. And I think that's starting to repeat itself. I think it's starting to repeat itself. That cycle is starting to repeat. But moving from the oil prices in Russia, I want to quickly touch upon these last two topics. Right now, the premium on gold in China has been hitting its highest records due to supply strengths and demand, mostly demand for gold in China. So that's been crazy.
Hey, why is that?
Basically, it's a lot of demand. People in China want to buy a lot of gold, bro. As a matter of fact, if I'm not mistaken, China normally purchases gold on a 3 month to 3 year basis. But at this point, they've been purchasing gold on a monthly basis, and they've been doing that consistently for the past 9 months straight. And from my understanding, they have purchased more gold in the 9 month period than they have ever. So for that reason, being that the demand is so high, the premiums, same way it happens in the United States, the premiums end up going up.
Outside, it's crazy. I think the premium, today it was like 3.2 trading. Gold was trading over like 3% today. And you want to know something else crazy too? Bitcoin was trading, I think, at like $32,000 in China today. So It was a lot of arbitrage happening where there were people, buying Bitcoin in the West and then trading it through Chinese markets for to get that arbitrage, because people trying to get out of the yuan, bro. If you look at the yuan chart, it's crazy. You know what I'm saying? Like the thing is low. That chart looks ugly, man. So I can just see people like selling, just trying to get out of that yuan to get into something, that's gonna help not destroy their currency. You know what I'm saying? They've been buying gold and they're buying gold and they buying Bitcoin. If you can see the premium, like Bitcoin was traded, which is why I think this crypto pump came from, man, because of China. I mean, look at that. It's crazy.
I wish I could make this bigger.
So But yeah, I think they're getting out of the yuan and getting. We talked about this in the previous show too, man. They're getting out of
everything.
They're getting out of the yuan and they're trying to get into other assets, which is why everything over in China is trading at a premium right now.
Just looking at the chart, it looks like the yuan is closest to its lowest level since probably January 2010. If I'm just trying to quickly look at the chart, you know what I'm saying? But
yeah, man, that's tough.
For that reason, bro, not only is the demand for the premium being shot up based off of the demand for gold in China, based off of the prices and the devaluation I'm gonna say the current reduction of their currency. The gold price itself has hit a record high in basically Shanghai, bro, in China.
Yeah, man. It's crazy how that happened, bro. Once I get me a little, I don't know, man. I need to get me a little Chinese girlfriend, but so I can be, you know what I mean? So I can, hey baby, go ahead. I'm gonna see you the Bitcoin. Go ahead and sell it over there for me. You can go ahead and keep a little bit. They're gonna get
I know you ready to talk about some crypto. So I'm not. This is my last video, and I ain't trying to comment on the down moment, but you know I like to jump in with my metals and all that stuff first.
Now go ahead, man.
My last statement is gonna be related to crypto, and it kind of hit me because I can feel where this dude is coming from. I got a video for a guy he's a popular YouTuber, Jason Casper.
I know Jason Casper.
He lost $700,000 using crypto. I know everybody's gonna say, yeah, he should have took his money off the exchange. We already know the story. But in this case, the guy did take his money off the exchange. He put it into a wallet. But he's now he put it into what's known as apparently a hot wallet and not a cold wallet. So this is just me. I'm not into crypto as much as Marcus is, but for me it can be complex. It's not confusing, but it can be complex because first I was told that the markets were cool, you're good keeping stuff on the exchanges. Then we were told, take it off the exchange. And then we were told, so if you're good, you got it off the exchange, you remember your keys, you're all set. Now we're being told if you take it off the exchange and you leave it on a hot wallet, you can still have somebody take your keys based off it being hacked. And now we're being told that you need to have it on a cold wallet. Me personally, I feel like,
folks been saying keeping it in a cold wallet.
Yeah, that people been saying it, but at the same time, people been saying take it off the ledgers and put it on another wallet in general. So hold on, bro. My point is, I'm wondering how much longer it's going to be before people come back and say, you know what? You know what I'm saying? Cold wallets are being attacked by hackers too. They can get those too. So cold wallets aren't the best thing. You should not be doing this. And if you didn't do your due diligence, you should have did your due diligence. And
how long ago was this video recorded?
This is 3 days ago, bro. And let me say what I want to say though. I think it's terrible. I mean, first of all, you always have to do your due diligence. But for me, and this is the biggest reason why I'm not into crypto the way I'm in the other things, because it's not that a lot of people aren't doing their due diligence. With the lack of regulations, in my opinion, and people not knowing that much about the markets at this point, and so much lack of clarity, it's easy to not be sure whether or not you did your due diligence. It's easy to have something that you not know about cause issues. And in this case, with it not being necessarily, with it not being necessarily centralized, there's not really anyone to hold accountable. So whereas you could go to a bank or something if something doesn't go right with your money, if it doesn't go right on the crypto exchanges, there's really a lot less that you can do. Not to say that crypto is bad, not to say anything like that. It's just that you have to do your due diligence, and sometimes, a lot of times, based off of this market being so young, you could still be not doing your due diligence, even when you think you're doing your due diligence.
Your due diligence. I see.
Let's go ahead and get into this video. And none of this stuff we're talking about is financial advice. We're just spreading and sharing information.
I had $700,000 stolen from me, absolutely gone in a second. I lost everything that I had been working for the past 7 or 8 months. Now, I was debating whether or not to even make this video, but I think it's very important to highlight a few things that happened to me so that you guys out there don't share the same fate as I did. So basically, for the past 7 or 8 months, everything that I've been making through trading and through business that I've been putting into my crypto portfolio, I've been keeping in a hot wallet, an Exodus wallet. Now, if you're keeping your assets in an exchange, you know it's very vulnerable if the exchange gets hacked. But if you're keeping your assets in a software wallet, like Exodus or any other wallet that runs on your computer or smartphone, you have to understand that if your device gets compromised, then you can be hacked and your private keys can be found out, your passwords can be found out, and your wallet.
And I want to say this, bro, and this is what I mean by I wouldn't be surprised if they come back later and start saying the same thing about cold wallets. Yeah, hot wallets are attached to your phone or some electronic device. Cold wallets are not. But at some point, if you ever plan to transfer those funds from that cold wallet, you're probably going to have to interact with some hot wallet or some exchange. And at that point, you're reaching that point where you have to worry about certain issues in the systems that there's, as of right now, almost no way to catch. So, like I said, I'm just waiting. I'm waiting for people to say basically the same thing about cold wallets too. And when that happens, I wouldn't be surprised if the SEC ends up allowing companies like BlackRock or companies like ARK Invest to actually put out their ETF, because I feel like a lot of people at this point, based off of what's going on, would indeed think and feel that it's safer to have their crypto inside of an ETF where they can blame BlackRock or hold ARK Invest accountable versus just some basically exchange that everybody heard about within the last 10 years.
Wallets can be drained, and that's exactly what happened to me. Last night at about 3:30 in the morning, somebody hacked into my Exodus wallet and they drained all my accounts. So this is over 10 Bitcoin we're talking about, and a whole bunch of other assets that I personally had a plan for as we moved into the bull market to actually take that money and after the bull market cash out and use that to purchase another investment that was basically going to provide me with passive income for the foreseeable future, potentially even the rest of my life. So here's something that you guys really need to know. Please, if you are keeping any assets anywhere other than a hard wallet or memorizing those private keys, it is at risk for getting absolutely stolen. And this is crypto, right? There's nobody you can call. Once it's on the blockchain, that's it. There's nothing I can do, right? I just have to learn from this mistake. Now, this is my own fault, guys, because I did not take the due diligence to move this into cold storage. I did take the diligence to take it off exchanges. I'm taking it off Coinbase. I'm taking it off MEXC. I'm taking it off Bybit. I put it into a hot wallet, but I didn't take that extra step to move it into a cold wallet. And I also didn't take the steps to at least change the addresses and the passwords of my hot wallet on at least a monthly basis. And these are practices that I used to do, but I got lazy, guys. I got lazy.
And I appreciate it. So this is you telling me, hey, don't get lazy doing these.
No, bro. No, this is not for you. I mean, bro, I'm not gonna lie, bro. I done dealt with Exodus straight myself. You get what I'm saying? Like, this not necessarily for you. This is just a warning to our viewers. Like, bro, I'm not gonna say bro is an expert because I don't know him personally. I can't validate his credentials. But bro made $700,000. He's doing something successful in the market, bro. You get what I'm saying? He knows something about crypto more than likely. Mm-hmm. But even with all he knows, in order to trade up to $700,000, based off what he was saying, it seems like he was doing his due diligence, but
he still got caught slipping.
He got caught slipping, bro. Not because he necessarily gave out his keys or Well, but he got caught slipping because he didn't change his password every month.
He just said he got caught slipping because he got caught slipping. It's an Exodus wallet. So you can leave an Exodus wallet up. You leave an Exodus wallet up. You don't even have to, bro. You don't even have to have you ain't even got to have a password on it. You can just click the Exodus app and everything shows up. That's why, yeah, he messed up on that. He should have had his stuff in the ledger. You have it in the ledger. That's why, yeah, you gotta have it in the ledger, man. Look, hey, man, you gotta keep it on your ledger, man. You gotta keep it on your ledger.
How would you get that money out the ledger?
How
would you get
using the control and see the thing?
No. Specifically, how would you get the money off the ledger?
How?
Yeah.
Okay, so how do you what? So what? So say if I want to, I don't know. Say if you want to sell some Bitcoin, so you would use the app, use the Ledger app. You got Trezor, you use Treasure app.
Okay.
Tangent, you use the app, so you download the app.
Let me stop you right there. If a hacker creates a new program separate from the program that specifically got him, and they were to get your funds while you're using that app, how would you have, what due diligence would you have used to stop that?
That's a wild scenario.
That's not a wild scenario, bro.
That's a wild scenario.
Bro, after all this stuff that's going on in the crypto market, you're gonna say that's a wild scenario, bro. People getting hacked.
Yeah, that's a wild scenario though.
Bro, it's not a wild scenario for a hacker to create a system that would only hack at a certain point. Banks get hacked, all kind of systems.
Well, how would the hacker? Okay, well, how would the hacker know that you're about to I'm going to make a transaction at this certain time? And besides, you can't access the wallet. You can't access. If you're using a hardware wallet, you can't access the wallet without the first place he messed up at was the password, because I know what Exodus.
Let me directly answer your question. As a hacker, they can create bots that can monitor a service and run infinite possibilities based off of the number of bots. So they can have bots ready to do it whenever you do it. They don't have to be woke. They don't have to be there. They can create a system to do it. And they can create a system that once you log into StreamYard or whatever we recording on, you get hacked then. My point is, a hacker can create a system to hack at a certain point. If they create that with a bank, you can call your bank.
I see what you're saying. But
let me finish. If they do that at the bank, at that point, there's somebody who you can call. People swindle money from bank cards, credit cards all the time, and the bank will replace it if you notice it missing. If it was to happen with pretty much any company that you deal with, there's something in place. My point is, even though you good with crypto, you do your due diligence. If you were to get attacked, if a hacker was to find a way to attack your account at that point of trade, how would you, doing your due diligence, have stopped or prevented that from happening, or saved you? How?
I mean, in that specific scenario, it ain't really nothing you can do.
There's nothing you can do, bro.
But that shouldn't. But his mess up shouldn't discourage people from wanting to invest in crypto or using cold storage wallets, because like he just said, he left his password up with Exodus. With Exodus,
he did not say he left his password up.
No, he didn't. He didn't have a password on his account. So what I'm saying,
no, he did not say that. He said that he normally changes his password once a month, which he has not been doing. That's what he said.
So that's still with the software wallet though. He's still using the software wallet. I keep everything on my ledger. So in order for if somebody wanted to take crypto from a wallet, that's cold storage or a software, hardware wallet. First off, you need the device. The password, you set a password for the device just to cut it on. And then you also have an app, or you can have, or there are hardware wallets that work specifically on a computer. Or I mean, it's different kinds. You got card.
You understand crypto. You understand crypto, but based off of what you're saying, I'm almost certain that there's parts of computer programming and hacking that you don't understand.
Yeah.
And all I'm saying is the stuff that you don't understand, no matter how much due diligence you do when it comes to understanding crypto, there's no way for you to fully do your due diligence when it comes to hackers of crypto, because there is no way. And all I'm saying, if something was to happen, which there is a possibility of, if you're ever moving your stuff off of your wallet, which at some point you will have to do, all I'm saying is there is some point where you are vulnerable. And if you are attacked at that vulnerable time, there is nobody who can help you.
Yeah.
That's all I'm saying, bro. That's all I'm saying.
Yeah. But that still shouldn't. But I mean, bro,
At any point in time within the last year, could you have lost money the same way this dude has?
At any point, could I have lost money the same way this dude has?
Yeah.
No.
So you're saying that at no point in the past year did you have any money on Exodus?
No.
Gotcha.
Keep everything on the ledger, man. Everything. I have an XRP wallet. So yeah, I guess you could say I'm kind of taking a risk with an XRP wallet. That's one of the only ones that, and that's not everything, but I do want to have a wallet to where if I'm on the go and if I need an emergency fund, you don't have to go through everything you have to go through with the ledger. Because bro, with the ledger, you got your device. You have to put your password in on your device. You have to go to the app on the device, click the app. You have to go to your phone. You have to, all right, whatever transaction I want to make on my phone. First off, I have to put a password in for that app. So the two passwords, the password to control the remote control and the passwords to get it to the app on your phone that controls the remote control. Those are two different passwords. You can have those two. You can have those two passwords. Those two can be different. So if I want to approve a transaction, before that transaction goes out, I have my device, and it's Bluetooth also. So I would say I want to send a Bitcoin to this wallet to that other wallet over there. So I would have to download the app, the Bitcoin app from the hardware wallet app on the phone. I would have to go there, go to Bitcoin. Okay, I want to send this much. Okay, put that address in. Send is going to ask me to confirm that I think 2 or 3 times on my hardware wallet before that transaction sends out. So, and it happens just like that. You know what I'm saying? So it's always,
bro. That don't matter. Okay, so the app.
Like I said, man, he said it. He messed up. And so when I go about it, man, I try to. That's why I'm a holder.
He said that he messed up by not changing his passwords every month like he would normally do.
On a software wallet, not on a cold wallet, not on a hardware wallet. Now, if you're using a hardware wallet, you probably don't have to do that because it's more layers of security than just having it on Exodus. You had it on Exodus. You have it on Exodus. That's okay. I don't know. Say we're going out of town for a week. We're going out of town for a week. Okay. I don't feel like I don't want to bring my hardware wallet with me. That's a risk because I can lose it, even though you memorize your 12-word phrase, you can lose as many devices as you want. As long as you got that 12-word phrase, you can get into it. So you can lose your ledger. You can lose your ledger as long as you know them 12 words. You can just buy another ledger, put them 12 words in, and then you back on it. So, but if, like I said, but it's just there's different security walls, especially when using a hardware wallet. Buddy wasn't using a hardware wallet. You know what I'm saying? So that's I feel like him not using a ledger or anything like that. He taking 75% off, 75 of 100. I would say of that security by default, just off the rip. 75% of your security is gone.
He definitely went more risky by not having a cold wallet. He was definitely more vulnerable. All I'm saying is a cold wallet doesn't not 100% take the vulnerability away. It's 1,000 times better than a hot wallet.
Yeah, you can give a phishing attack. Yeah, you say if you was to get a phishing attack, but that's still on the person though.
All I'm saying is a phishing attack is normal.
You said it's normal?
Yes, it's normal. It happens every phishing. If you look in your city, it's been 100 phishing attacks a day on somebody probably bank account or something. So technically, that's normal. All I'm saying is when it happens with this,
but that's not. But bro, that's not that. It's not common though. That's not common. What he's talking about, that shit's not common though. As long as I've been in crypto, bro, that hasn't been common. Mark Cuban's MetaMask just got hacked. Now this does leave. Well, say what? Mark Cuban. Mark Cuban.
Come on, bro. Shit coming.
Nah, because Mark Cuban, Mark Cuban wasn't using a hardware wallet. Vitalik, I don't even think Vitalik was using a hardware wallet. So the fact that they weren't using hardware wallets is almost like I disqualify that shit. You know what I'm saying? Like, bro, if I make a jug or something like that, all of a sudden I come up on some shit. I'm going straight to the hardware wallet, bro. Straight to it. I feel more comfortable there. Like it's like, okay, or I would buy Bitcoin, put it in a ledger, don't touch it. And if I have to sell, use Coinbase.
I think you missing my point. You're trying to make the point of cold wallets being less riskier than hot wallets. That's irrelevant. My point is at every point you got risk. It just so happen if something happens, there's nothing that you can do about it. It don't matter how.
It's like I said, it's not. That's why you got to know, taking your money off of the exchange, you have to know what risks come with doing that. Or you can be one of these people that leave your stuff on Coinbase. To be honest with you, I don't mind Coinbase. I don't have a problem leaving money on Coinbase. Coinbase specifically, I have zero issues. I have zero issues with leaving with Coinbase. But like I say,
for me, bro.
What's up?
In all honesty, I trust Coinbase as far as a place to store crypto more than anywhere else right now.
Absolutely. I would say other than a hardware wallet, I would put Coinbase. I would definitely put Coinbase number 2.
Me personally, I put Coinbase number 1 because depending on how it depends on how unless you're going from that cold wallet directly to Coinbase. If you're going from a cold wallet to anything else other than Coinbase, really.
I agree with that. I definitely agree with that.
Because my issue, like I said, is that contact point, whatever contact point you make when you get off of your wallet and their ability to be hacked or either to secure funding. And I feel like if I had a cold wallet and I was unloading funds onto Coinbase, if Coinbase was to get hacked, I feel like Coinbase would secure those funds. I would feel comfortable with that.
I definitely feel on that. But you know, taking your money off of the exchange at that point, it's the wild, wild west, man. But at the same time,
not with Coinbase though. Not with Coinbase.
Not with Coin, but at the same time, we seen banks go down. You know what I'm saying?
I'm not
anything. You know what I'm saying?
Bro, and that's why you see me not really touching crypto like that, bro. Because that with me doing my due diligence, this is the type of stuff that I come across. So to me, folks be saying you didn't do your due diligence. I did do my due diligence, so I'll be like, nah, based off of what I'm seeing, it's you know what I'm saying, the risk. But if you can tolerate the risk, if you can do the due diligence, if you can get your code like this, bro, my hats off to you, bro. If to truly get somewhere in crypto, that's why I say this dude, I can't say he's a professional, but to get somewhere in crypto, you really got to understand a lot of complex stuff.
Yeah, bro. You got to understand all of that stuff, man. Like you can send. You know how we talk about different. You know how we talk about different the layer 2s. So those are like the different subnets on top of Ethereum, right? You can send money. Say you can send an ERC20 to a Polygon address, and it's a chance you can lose that money. Just because you set the network wrong. You know what I'm saying? So yeah, bro, like I said, man, it really is, man. But after a while, man, when I went down that rabbit hole, bro, I love it. I love it because, bro, in the future, man, you know, I want to be active, bro. Like, you know what I'm saying? Like the reason why I'm doing this, man, is so, you know, hey, I want to, you know, I want to go around the world, man. You know what I'm saying? And it's like, and it'll be tough for me to be able to do if I want to live in another country, which is definitely what I want to do and what I'm going to do. It will be tough having. I won't want to keep it. I won't want to keep my funds in a centralized exchange because I want to know where I would be going. You see what I'm saying? Or you could think about, or somebody in that situation, they wouldn't say, you know, say that's your plan. Okay, I don't know where I don't know what I'm gonna choose, bro. So you know what I mean. So that's the best way. That's the best way.
As far as the benefits, the ability to move around, the lightweight, you ain't got to carry nothing. It's there. Everything can go. No taxes on it. It's moving. You don't got to ask nobody.
And we are in the early parts. It's not, you know, it's not like, you know, it's only been around for
10 years.
Yeah. So, bro, we early. But what I want to get in, I want to research what it is I need to, you know, what's going to be here years from now. So I want to get into it. I want to hold it in the safest place, which is why, like, when I do make moves, man, I want to make sure that whatever coin I'm invested in, it's like, hey, you up in this thing. You know what I'm saying? So yeah, it's a risk, man. And I definitely treat it like that, bro. Like I try not to touch anything. There are only certain dexes that I'll use, you know, decentralized exchanges. So it's only certain dexes that I'll use. You know, if I needed to use a dex, man. But oh man, man, like, you know, you already know that, man. Like, you know, if you good on Coinbase, man, but if you know, once you take it off of Coinbase and start to transfer it here and here, there, you know, that's when you hey, you in the wild, you are in the wild west then, man. You can be around, you know, the safe part, like, okay, you know, I'm not about to, I know what I'm about to do. I want to send some of it here to this wallet. Okay. I want to make sure it's in the cold storage wallet. I want to send it there. Hopefully wherever you sending it to, you know, hopefully that's either cold storage or somebody gonna get it and then cash it out quickly or something like that. But yeah, man. And it's also, and as you also got to know what you investing in too, bro. You know what I mean? Because you can be into a coin that moves slow as hell. You could be into a coin that moves slow as hell that has high fees. You know what I'm saying? So it'll take, you know, you'll think your money's lost, but it's just taking days for the transaction to happen. So you really get like a taste of what these cryptos actually do once you move them off of exchanges, and some of them there are benefits to some of them is some, you know, it's cons to it. So
yeah, man. So I mean, basically everybody out there, man, if y'all gonna be investing in whatever you're investing in, make sure that you're doing your due diligence. But that's really it for my particular stories, bro. What you got?
Yeah, man. So hey, I'm gonna be brief with this. Let's see, y'all. So look, speaking of wallet hacks.
Speaking of you said speaking of market hacks, which are earlier, I think you said they were not common, but go ahead.
Bro, I'm saying it's not, bro, for people that actually know what they're doing. And bro, this is Mark Cuban lost $870,000. I don't think he's sweating that.
Yeah, I'm sure Mark Cuban does not know what he's doing. I'm sure he does not know what he's doing.
I don't think he know what he's doing, to be honest with you. I don't think he knew what he was doing, to be honest with you, for real. Like a lot of these folks who claim that they know what they're doing in crypto, but they getting hacked. You shouldn't have got hacked. Come on, Mark. You tripping, dog.
How did he get hacked?
I don't know. We finna find out. Let's see. He probably the same way. He probably left his wallet open. Probably, I don't know. We're gonna see. Being invested out team on the Mark Cuban confirmed on Monday that his Metamask crypto wallet was the target of a hack, resulting in a loss equivalent to $870. Suspicion of moving of funds from the wallet identified on Etherscan's Mark Cuban was first known by a blockchain expert. Despite the substantial loss, he was able to transfer remaining funds to another Coinbase. The rescue transaction not.
So he did not leave his account open. He had 160 days of inactivity.
He said what is it?
He had 160 days of inactivity on his account.
Yeah, well, he should have had a Nicole storage wallet.
Yeah, I'm just noticing that he didn't leave his account open
for 160 days of inactivity. So he probably just had it sit. See, that's what I'm saying, bro. Like, if you just gonna have crypto, this is a message to everybody. If you are just gonna have crypto just sitting in a wallet, not doing nothing, just try to have it. Try to put it in a ledger or a Tangent wallet or a Trezor or anything like that. That's that extra line of security, you know, for your money, because that is your hard-earned money, and you don't want it 160 days of inactivity, bro. You know what I'm saying? So this wouldn't even be possible if he had a cold storage wallet, which it wasn't. So this event underscores the risk associated with digital asset investments. Cuban, by the way, man, these are black eyes to crypto, because one thing that sucks is the user experience and the user interface for this stuff. Like, crypto it does have to get its act together when it comes to like storage and onboarding people and figuring out this seed phrase. Yeah, I mean, it's a cool thing to be able to have it. You know, it's yours. You have the code, you have the keys to it, but I still think something needs to be done about these seed phrases and having to, we like the decentralized aspect of it, but it should be some other easier and, I don't know, more efficient way for people to just interact with DeFi without having to, I have to memorize the words and, make sure this and that is straight and all like that. So, but hey, bro, we still early in this. So get your cold wallet and stack sats in your cold wallet. So we got a hack there. Let's see. We have Key Legal.
Lost about another $200,000 on LTX.
Who did? Yeah, he did. Which y'all shouldn't have had money in FTX to begin with, man. Come on now. Key legal and risk executives leaving Binance US in wake of CEO stepping down. Massive layoffs. Bro, honestly, man, they just, for some reason, they do not want Binance anywhere in the US.
What do you mean? What do you mean the executive stepped down?
Yeah, of the this is a Fortune Crypto. Look, man, they want me to subscribe. When they start doing this?
I don't know, but I'm saying though, you basically said people hating on Binance. This is from within Binance. Their leaders, their executives, their CEO stepped down.
Yeah, well,
I'm saying, bro.
I guess from CZ point of view, he could probably see, okay, I do have all of these people stepping down, and that's more than likely. And this is the Binance US. This not like the international Binance. This is the US sector of Binance. So I can see why they got all these people. What's the what now?
What's the largest sector of Binance?
It got to be. Hold on. Let's see. Hold on. Where is Binance the largest at? Where is Binance the largest at? China is Binance's largest market, amounting to 20% of worldwide volume. A new report from Wall Street Journal says Binance users traded 90 billion of crypto-related assets in China in just 1 month, making the country Binance's largest market by far. So it looks like China is, according to CoinDesk, China is number one for Binance. 20%, jeez.
And 19% comes from the United States.
You said 19?
Yes.
So I think that number is going to keep on going down, man, because I don't think U.S. lawmakers want.
You've been missing the point to try to support your bias, bro. The point is the number one country is 20%, which is China. 19% is the United States. Their CEO and top executives stepped down at basically their number one country, bro. Come on, bro. This is no
they're stepping down from the U.S. office.
Why?
Because the U.S. lawmakers don't want Binance in the United States. That's why I think it is. No, that's why I know it is. It has to be it. But you can't have. But I don't. If there's going to be a crypto exchange that takes 19%, it's going to be Coinbase. So they need to do whatever they need to do to. Okay, even though Coinbase is in the lawsuit right now, if we're going to be trading crypto, it needs to be on Coinbase. It doesn't need to be on Binance. So I feel like they're going to any kind of way they're going to try to make Binance leave the United States altogether. You know, they can do whatever the hell they want to do outside the United States. But here in the United States, you got Coinbase, you got crypto.com. From what I've heard, FTX is making a resurgence.
Okay, based off of what you're saying that the CEOs and the top leaders are stepping down because the United States is planning to make it hard for Binance to do business. That's what you're saying.
Yeah.
If what you're saying is correct, it would make sense for them to step down from their position in the United States and go and work for the company in another country.
They probably already got that locked down.
No,
you know what I'm saying?
No. Their CEO Brian Schroeder left and is no longer with the company.
Is this Dubai? This is Binance. You said Ryan Schroeder.
Brian Schroeder.
Oh, let's see something.
Brian Schroeder. BRIANSHRODER. Brian Schroeder.
Brian Schroeder, Binance. Who is the CEO of Binance US? Binance US CEO Brian Schroeder is no longer with the company. Spokesperson confirmed the Associated Press Wednesday. The cryptocurrency exchange did not specify when or why Schroeder departed, but said that Chief Legal Officer Norman Reed is now serving as interim CEO. Now, I don't know, bro. Brian Schroeder probably seen the writing on the wall, and I probably would too. You know what I'm saying? I probably would too, especially with their state. But look at the state.
I agree. I feel like he saw the writing on the wall. But the writing that I feel like he saw on the wall, I feel like it's different from the writing that you think he saw on the wall.
No, I mean, bro, you still on that Binance is insolvent thing, man. Well, I mean, look, Binance ain't going nowhere. They probably going. I mean, they going somewhere as far as out of the United States, man. But nah, I don't believe that. he's seeing writing on the wall, especially okay, what last year? That was last year with that stable coin and that PaxG, Paxos company was they were the ones minting that BUSD. I think that happened last year, I think. So I'm pretty sure when he seen that, it was like, oh man, so this is like a slow death that's going to happen. You know what I mean? Like, I mean, it's cool, but I mean, that's value lost right then and there. You know what I'm saying? So yeah, I'm pretty, yeah. He probably is like, yeah, I need to find me another job. All of them probably said that. Now, whether or not CZ hired them to go over to the international offices, I don't know. But I think that they're gonna 100% try to push Binance outside of the United States. And
I believe that to be true also.
You know what I'm saying? So, you know what I mean? So, because I don't know, bro. Our lawmakers don't want a market that's, you know, like what we just seen. China is their largest market, and then what US is like right up there with them too. So I don't think they like that.
So based off what you're saying, Binance basically about to lose about 50% of their market share.
And probably, but hey, I mean, bro, crypto is a worldwide market, bro, and that's why I love it. You know what I mean? So we'll take that and we'll go somewhere else, or we can invest that in other projects. You know what I'm saying?
Yep. So, what else you got, bro?
But yeah, man. So we got that. And then let's see, we got look all the hacks. Let me tell you something, bro. Let me tell you something about the hacks too. You see all these hacks is happening. This is just me, but this is a sign. I don't know, bro. This just seems like a sign that
nobody go.
Go ahead.
Hey,
this is just a sign. This is just a sign to me that we're coming up out of this bear market, man. This is a sign. All these hacks happen. That's why I am a little weary. I do see this stuff happening. So
you're saying that that accounts getting hacked are a sign that crypto is about to come out of a bear market.
Yeah, man. I think so, bro. I think so, because I think we're coming to the end of the accumulation phase soon, and I think it's a lot of bullshit that happens from the end of the accumulation phase up until the bull market. So not at the beginning, I would say closer to the end of accumulation up until, okay, oh man, look at that. You know, look at that move right there. I think it's a lot of bullshit that's going to be happening in between that point, bro. Like, look, but I mean, Buddy just got hacked, but it's just a lot of stuff happening, man.
How much they got him for?
For Vitalik, they got Vitalik. This is on $691,000. This was a phishing act.
So there's 3 people that then basically got hit for $1 million.
Yeah, man. Man. I ain't gonna lie to you though, bro. You know, this isn't a good thing for this isn't a good look for cryptocurrency, man. But like I said, this is the main. It's just the user experience, man, is where crypto has to get better at. But I think it will over time, which is why I still think we're early, bro. I still think we're early. So over time, I believe that problem is going to get solved.
It's like you know how the FDIC back your money at the bank.
Mm-hmm.
It's like the FDIC back your money at the bank, but it's like somebody waiting to rob you as soon as the bank tell them give it to you. You know what I'm saying?
It's like they were right there waiting. Yeah, bro. Like
it's somebody at the door, bro. It's somebody at the door.
They waiting for you. Unfortunately, man. But I mean, hey, you know, bro, those are some of the chances that you take when you when you take your money off of the exchange, man.
This is gonna push a lot of crypto investors into ETFs if they get approved.
Yeah. I don't know, bro. I still like the whole like the original asset though. You know what I'm saying?
I'm just saying a lot of people who fear or don't know that much about this area.
They probably will. They probably will. Yeah, they probably will. So yeah, Vitalik was hacked on a phishing scam. And then I got one more for y'all, man. Well, two more.
Drum roll on these last two. We've been in about an hour and 30 minutes.
But hey, this is, I remember I told y'all about Render. Render
is one of the companies that's partnering
with Apple, man. So I found this. I was just looking at some stuff and I found this right here. So let's see, the Octane X app for M1 and M2 iPads is officially released. Here's why it's such a huge deal for the rendering industry. The app is the industry's first and fastest spectral GPU rendering to build mobile production workflows. The app's access to the render network in the future will enable creators to access their near unlimited decentralized GPUs, scalable mobile rendering jobs in the cloud. Octane X for the iPad is a window into the future of ubiquitous immersive computing. With our tools, we hope it will become a game changer for creative expressions. I'll tell you something, man. I'm so bullish on Render, man. And I did a little bit of consolidating too with Render, actually with my chain link position in Robinhood. I started another chain link bag, but I was like, nah, I think I'm just that bullish on Render, bro. Look at this FTX chart right here. That thing was at about $33 and then just boom. My goodness. So yeah, man. And see, we got the top 100 right here. Injective. That's one of the coins we was talking about in our top picks for September. We talked about Injective. We talked about Ordi should be. I know y'all. See, Ordi was one of them also. We're down 2% right now. But I mean, this thing touched $4.14 down here. Shoot, we was at about $3.19. So congratulations if you listened to us on that one. So, but yeah, man. So that's just about it. Doge up 1.09%. So XRP up 2.31%. So yeah, we slowly climbing back up, slowly recovering, man. So hopefully we can close this week out in the green. So, but yeah, bro, you got anything else? For him before we add a chop to this?
Nah, bro, that's it.
That's it. All right, bro. Y'all stay tuned for the next video. Appreciate you watching. Like I said, keep an eye out. Still keep an eye out for these top picks. The month is not over with. Yeah.
And make sure y'all hitting the description section below for links. Robinhood, Webull, all that stuff down there. Make sure you clicking those links to get free stocks or whatever you can get from those. Crypto or whatever. If you have any questions, list it down in the comment section below. Be on the lookout for our videos. Make sure you're liking the videos. Make sure you're looking out for the shorts and all that good stuff. Every week we got a weekly rundown, and during the week we got other videos coming. Appreciate y'all for watching through the video. Dual Economics.
All right, y'all.
Mike, Cursor Crypto. We out.
Rise up.